Hey, what's up, you guys? All right, so TXMC posted a video today, and towards the beginning of it, he spends quite a bit of time talking about this graph here, and I wanted to explain how you can actually pull up this graph yourself. Give me 1 second. So about 2 days ago, Will Clemente put out this tweet, and including this graph, which is actually a really basically more or less the same graph as in the bottom half of TXMC's chart here. And so we'll talk about how to set up this graph for yourself. Okay, so the first thing you want to do is basically go to coinalyze.net. I've got that pulled up right here. If you look on his graph, you can see here the thing that he's got pulled up is so Bitcoin, USDT, perp, and he's got the 4 hour, and this is for Binance. So let's look for that on coinalyze. All right, so Bitcoin, we'll do show all. We'll scroll down. This is all BTC USD. Not that it matters a whole lot if we're, well, as far as I know, it doesn't matter a whole lot between USDT and USD, but let's just do what, let's just go with what he selected. So he had BTC, USDT, and Binance. I'm sorry, excuse me, perp, so perpetual futures Binance, right? So let's do that right here. Looks like that matches up. And so now we can see our graph matches his, right? BTC, USDT, perp. Um, the next thing we want to do is he's looking at the, well, down here on the time scale, you can see he's included, he's zoomed out to where he's including like part of December. So let's go ahead and do that next. Right now, if we zoom out all the way, it only gets us back to the 2nd of January. So we'll go to 15 minutes, see if that gets us a little further. Okay, now we're in mid-December or December 22nd. So let's keep going back a little further, 30 minutes. Okay, almost there. Let's go to 1 hour. And there we go. That takes us back more or less to where he was at. I think on his graph, he starts at around the 16th. So let's zoom in just a little bit more. Okay, let's see if that matches up a little better. Okay, that's better. Now, let's see. Okay, so on the bottom half of his graph, which I'll show it again, he's got the open interest displayed down here. So to get that shown, you want to come down here. We'll close this panel, which is showing the buy-sell volume. And we'll come up to indicators, and we'll look for open interest. So just type open, actually just type open, and you'll see open interest pop up. And so that pulls up that panel, and you can see that pretty much matches what he was showing on his screen there. So anyway, just like I said, I want to make a quick tutorial for those of you who aren't familiar with coinalyze, aren't familiar with like, putting these other indicators up, etc. Just hopefully it'll be helpful to you. Let's see if there's anything else I wanted to say about this. Okay, so on his graph, this is a really minor difference, but he's showing the 4 hour candles, so we can switch that over as well to 4 hours. It's going to mess with the zoom, but that's okay. I will zoom back in to more or less where he had it. And I guess and if you, I don't know, whenever you watch this video and set this graph up for yourself, as of this time, not, the thing that he was pointing out is that open interest had not dropped, despite the fact that, the price in Bitcoin had dropped. And something that if you're not clear on, this looks very similar to the price of Bitcoin, but it's not exactly the price of Bitcoin. If you pull up like Trading View, well, hang on, let me give me 1 second. Okay, so I've got Trading View Bitcoin showed up on another screen here, and I'm looking at it, and basically the price is closely follow. I mean, in general, you're going to see the futures price here very closely matching the Bitcoin price. So if I move this over, you can see this is the Bitcoin price, right? So 470 over here, we're 465, 462. In general, they're going to closely follow each other. Now, later in his video, he showed this other panel, which kind of basically indicates the difference in price between the perpetual futures and Bitcoin. So let's see. Okay, so at this point in the video, he displays this panel down here, and this is the one where he said he got a script from somebody at Glassnode to display this. And this is a visual indicator of the difference between the futures price and the Bitcoin price. Um, so yeah, I'm just wanted to mention that, like I say, this isn't what you see in the top panel here is not exactly the Bitcoin price. There is a difference. They do match each other, and the difference between them can give you some insight. And that's what some helpful insight. And that's basically what TXMC was talking about when he showed this indicator down here, or not indicator, but just this panel. So that's something to keep in mind. Another thing to look out for is I don't know if this indicator or this, yeah, I guess it would be an indicator is if it's available anywhere. He said there's a script floating around out there. So if anybody knows where to get that, post a comment below. I'd like to see that. Maybe I'll ask TXMC on Twitter or something. But let's see. Okay, so I think the last thing I wanted to say about this graph is I kind of wanted to tie it into the analysis that's been floating around Twitter the last couple of days. Over here in this tweet, TXMC pretty much endorses this guy's thesis, and where he's basically saying he's bearish and defensive for the coming 3 to 5 months. Okay, and he actually does get a little more detailed. And this other guy, Dr. Jeff Ross, he gets a little more detailed in a separate tweet where he's saying like, I'm recording this video on a Friday. He's saying in the coming days bullish. So apparently he's expecting some kind of a pump next few days. Give me 1 second. Yeah, so like I was saying, he's saying maybe next couple of days, bullish, so maybe a bit of a pump. Over the next few weeks, neutral bearish. February and April bearish. He's predicting a bottom in late April or May. I'm a little surprised that he's getting so specific. I don't know. It's not my taste to get so specific. But anyways, they're interesting takes. But the reason I wanted to mention it is that there is a lot of consensus around the fact that things are looking bearish short term. Well, like I said, TXMC pretty much endorses his thesis. Let's see. There's another guy that TXMC McAlvey. He mentioned in his video as well, in TXMC's video, and he's basically saying here, calling for a short term, a bounce in the short term into the high 40s. So that lines up with what this other guy was saying. So I don't know if they're all like talking to each other or listening to each other or what, but you are seeing this little consensus. Well, the consensus I think amongst a lot of serious analysts, including like Ben Cowan, for example, is that it's going to be a rocky few months, and that if there is a bullish uptrend, it's not going to come until later this year. So pretty much all these guys have a consensus around that. But interesting thing, of course, Bitcoin never moves in straight lines. And so like, are we going to go straight to 30K? Are we going to go start, playing around in between 30 and 40 immediately? For whatever reason, there's some people who are saying they expect a pump. And now, is that just a hunch? Well, that's where we tie back in the graph that TXMC was talking about, right? It's like, okay, one, if the open interest does collapse, that may cause things to go a little haywire. Like if the shorts get burned, if the longs get burned, who knows what's going to happen there? But like you're saying, next couple of days, keep now that you know how to put this graph together, keep an eye on it, and let's see what happens. So a couple more comments about this graph. On the December 4th dip for Bitcoin, that caused a lot of liquidations for the longs, right? And that's what he was talking about when he said, we experienced this dip here in open interest. And what TXMC was saying is that, hey, we haven't seen this dip. Even though Bitcoin has gone down quite a bit, we still haven't seen this. So it might be worth it to kind of play through your own head the various scenarios which could come up, right? So people are saying, all right, looks like short-term bullish in the next few days. I think one of the guys, McAlvey, said he wouldn't be surprised if he saw the price shoot up to like maybe the upper 40s. So this kind of area right here. If that happens and some of the shorts get liquidated, we need to pay attention to this and see, okay, how much does this open interest draw down as a result? So let's say we go up there and everybody says, okay, I'm expecting, prices to go down because everybody's saying that, we're midterm bearish. So let's say a bunch of people take profits and move over to cash. Um, and so then let's say the price dramatically drops and we, fall through one of the supports here. I would say what's the next support? I mean, pretty much 41,000 is this kind of level we've been hanging out at right now. Um, I had a line drawn here. I thought the December 4th wick, right? When the price dropped down, we made this December 4th wick line. And yesterday we were kind of touching it, but then pretty much today we fell through that line, which to me was a kind of a big deal. Uh, I feel you've heard people talk about how we're in no man's land. To me, that means we're in no man's land. Like just the fact that we dropped through that December 4th wick line. So let's see what else. All right, so let's say we do go up to the upper 40s, and like I say, people cash out because they're the expectations of the midterm market being bearish. So the price continues to drop. At some point, let's say we pump, we liquidate some of the shorts. Okay, price drops. At that point, maybe we flush out the rest of the longs. I would guess if they don't withdraw. But anyway, at some point, like TXMC was saying, keep an eye out for this open interest to drop the way it did here. I would say that's something to keep an eye on, over the next week or two. So yeah. All right. So while I'm at it, one thing I wanted to say was I know there's a lot of folks that are new to investing, and as am I, and I'm learning along with you all. But one thing I wanted to say is that if you take any beginner's like trading course, they're going to tell you never trade against the trend. Okay. What they mean by that is if you take a look at the all-time high of Bitcoin, November, I mean, it's very clear to anybody looking at this chart. Bitcoin is trending down, and when it's trending down, you don't want to make bullish trades against it. What that means is if you see a dip and you're like, I'm going to buy some, hoping that it goes back up and then sell, right? The most basic kind of trade. Um, Unless you really know what you're doing, if you're just starting out, it's generally recommended that you not do that. On a downtrend, if you have large enough bags, there are people out there who are happy to buy the downtrend, but they're not buying usually with an eye towards trading. They're buying with an eye towards getting in positions like to DCA. Say, okay, I'm buying some here, I'm buying some here because I don't know where the bottom is, right? And anybody can do that as long as you're DCAing a sufficiently small amount. Whatever, if you have $1,000 to DCA in over the next 7 months, I mean, you got to divide that up into the number of weeks and say, okay, I can afford to put this into Bitcoin no matter what. So, keep that in mind, guys. If it's just going back to the basic principle, if you're in a downtrend, it's generally not recommended that you make bullish trades. You do whatever the heck you want, but just keep that in mind. Let's see. And last thing I wanted to mention to close out the video is don't just get lost in crypto. Pay attention to the macroeconomic environment. There's a lot of places people are saying, hey, look, the stock market's been heated for a bunch of years. People are expecting a pullback. There's a lot of respectable analysts saying 2022 could be the year that happens. And that's, of course, related to the Federal Reserve, the tapering they're talking about doing, all that stuff. There's going to be a lot of interplay there. Of course, don't forget, we've got COVID, which is always kind of hanging over our head. Who knows what's going to happen with that. There's the issue in Kazakhstan with the miners being shut down, affecting Bitcoin. A lot of people argue about whether or not that's priced in or not or whatever. Hey, just actually not just the fact that the miners were shut down, but just the overall instability of the area. That also plays a role, right? People talk about, hey, a black swan event could really shake things up. So the Fed, of course, with their meeting minutes this week being released, basically essentially signaling to everybody to please be risk off, right? Um, And then, well, whatever. Some people say the China Evergrande is basically nothing. Other people say, it can still be an issue. Whatever. So the point is, there's just a lot of bearish things going on in the macro economic area. So yeah, it's just stuff to keep in mind. Yeah, so please, 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 guys, when you see the less sophisticated influencers on Twitter just mindlessly tweeting about, buy the dip and hold and all that stuff, um, guys, protect your wealth. Take profits when you can and be conservative. I would say, if you want to be this in this for the long haul, please don't listen to these, these, like I say, these really frivolous, unsophisticated analysts. Um, they they're making money when you hold, guys. You're holding their bags. You're helping to prop up the price as long as possible. So just be really careful, yeah, and protect your wealth. Okay, have a great year, 2022. Bye, guys.